What's up, everybody? Michael and Coco here. You're watching episode 25 of the Weekly Scan.
The Weekly Scan.
In episode 25, we're going to be going over 7 different stocks using technical analysis to create trade plans. We're going to map out supports, resistance, patterns, and I'm going to walk you through exactly what I would do to trade these stocks. As for a quick disclaimer, these videos are for entertainment and educational purposes only. If you do not have experience in the stock market, I would highly suggest you to start off by paper trading. Now, if you don't know how to start paper trading, there's a link in the description below to Webull. That is my brokerage of choice for trading stocks. It's very easy, it's intuitive, and if you use that link in the description below and deposit $100, you get 2 free shares and me and Coco get 1 as well.
It's a win-win, baby.
Just remember, if you are paper trading, do not trade with the full $1 million of paper money that they give you. Use exactly what you would be trading within the real markets. So for example, if you only wanted to trade around with $1,000, $2,000, or even $500, make sure you're placing trades that mimic what you would really trade in real life. That is what's going to make you better. Pay very close attention to all my risk management talk throughout this show and the stop losses that I mention as well. With all that said, let's go ahead and get into today's episode. Welcome to the computer. We're now going to go over the 7 different stocks that are on my watch list. I'm going to walk you through my specific type of trade plans. These are focused heavily on risk management, which is the only thing that we have complete control of in the markets. One thing that I want to note is next week, Jerome Powell, the head of the Federal Reserve, is going to be coming out and talking at Jackson Hole. So when you're making these trades, ensure that you have some sort of stop loss in place, because sometimes with certain data that comes out from the Fed, the market reacts very negatively or very positively to that data. I don't personally like holding trades overnight or when this kind of data comes out, because it's too hard to determine whether it's going to be good news or bad news. But we're looking strictly from a technical perspective for this week heading forward, so let's just dive right in. The first one on my watch list is AMD. This has been on my watch list many times previously where we were talking about cup and handle patterns, and now it really broke out a huge move for AMD. It's in bullish context. You have the 50 period right here and the 200 sloping nicely up. Then you have a nice pull right here, and then it's kind of forming a bull pennant. Some might call that a bull flag. So how would I go about trading this specific stock? Well, let's go ahead and map out some support and resistance. The resistance that I see is really right here around this trend line that was sloping down. And then we had a big green day right here, and then we broke above it, a little back test of that trend line, and this might be the continuation point to move potentially higher. As far as a floor goes, it looked like right around here at $75 was kind of that hard floor to potentially, if we got to break below that, it might head to 70 and even potentially the 50 period moving average. So right here in this specific trade setup, you'd probably be safe entering in right around this range from $82.50 to $85 and then having a stop loss right below that trend or the low of this candle. The low of this candle was $82.23. So if you want to give it some wiggle room, you can make it $81.95. Now, this stock can move very quickly. It is volatile. It has a beta of over 1, which means that it moves faster than majority of the stocks in the indexes. So you got to pay close attention to your risk management. But this looks like a potential follow-up with momentum to the upside. As far as a target goes, I would definitely consider taking some off the table right here at around 87.50 or 87, just because it previously had resistance up at that point before. So the price right now is at 83.81. If it runs up to 87, I mean, that's a pretty large percentage point move in a quick period of time that this could potentially move to get there. One thing that I want to note is that the MACD is technically trending bearish, but it is way above the 0. So you don't want to hold too much weight on that. This breakout right here did happen on a little bit extra volume, so that is nice, but it would have been nice to see much more volume take place, something similar to like this candle right here. So monitor it closely, have a tight stop loss, but ultimately if you get stopped out and it moves lower, this doesn't mean that this stock is not a bad one to be in. This one has been on a tear, but if it does pull down back to this 75 range too, 76, whatever, you can have a tight stop loss right under that and re-enter in, because it could very well potentially pull back down and move sideways like this and then potentially coil tighter to a break to the upside. but we will see. Let's move to the next one. Here is ticker symbol PRTS, and this one popped up on my scanner because of high volume and this nice little hammer candle that formed right here. Now, overall context of this chart, it's bullish. You have the 50 period way up there, spread way down here to the 200, so it's a nice spread, nice bullish momentum moving to the upside, and you can see that with just the price action nicely trending upwards. So how would I go about entering into a stock like this? Well, clearly there seems to be some resistance right around $15.50 to $16. It did go a little bit higher, but it didn't close above there. So there has not been a solid close yet above $16. And the price has kind of been forming this trend line, kind of moving up tighter. So it's coiling a little bit tighter. Overall, this looks like, hey, if we get a break above 16, that could be the next leg that really shoots this in the positive direction. So how can you go about trading this? Well, there's a couple ways to go about trading this. One, you could put it on your watch list, and as soon as the price has a daily close above $16 on high volume, then that would indicate that, hey, we might be seeing the move continue to the upside. And then you could buy into it, and you could just trade into that momentum. That's what a momentum trader would do. If you were speculating on a buy like this, well, you can just simply enter in wherever the price kind of opens up on Monday in this kind of range right here. It would be nice to be in this blue circle and then have a stop loss underneath the low of this candle, the previous trading day's candle, which was 14.11. So give it some wiggle room, say 13.99 down here to make it safe. Or if you want to make it even safer, I mean, just a little bit lower, it looks like this candle here came down to 13.54. That's up to you. So 13.49 if you wanted to be even safer. But ultimately, it looks like it's trending up, so I would just have it more tight. So I'd say 13.95 would be my personal opinion. But you would buy in right here, and then you would speculate that, yeah, the price might coil up tighter and tighter, but you are speculating that the price will eventually break $16. Now, the benefit of doing that is you're going to be getting a better cost basis on this trade. However, the downside is you don't have confirmation whether this is a real breakout or if it's going to be breaking down. So a nice risk first reward setup is clearly waiting till the price is around here and then having a tight stop loss. Or another good trade, a risk first reward trade, is to wait for the breakout and then move the stop loss right there at $15.95 when we have a close above it, wherever that candle low is. So you want to make sure that you're kind of below the low of the candle that's on the breakout for whatever or whenever that takes place. So good little setup, looks really nice, bullish context. I would say that, hey, this looks like it could break $16 here in the near future. Let's move to the next one. Here is ticker symbol YELP. This is YELP. Really, I just like this long lower shadow right here on this specific candle. The stock has been getting just obliterated. It is in bearish context, so know that this type of trade requires you to be more aggressive because it's in bearish context. And what I mean by more aggressive is on the long side, when you enter in, you need to make sure you're moving your stop loss and updating it every day or every 30 minutes, whatever time frame you're trading in. So clearly bearish context, we're below the 50, the 200 is above the 50, huge spread, kind of aiming downwards. So this chart right here, bearish context. However, this nice hammer candle that formed might represent some sort of a bounce point. If I look at the history of the chart and go back where this candle formed, clearly it accessed support right around this level. When it touched here before, boom, it shot up. When it touched here before with a hammer candle, boom, shot up. So is this right here going to be another shoot up moment, or will we see some maybe sideways action slowly like this? Well, we don't know for sure, but what is nice is this hammer candle that formed is indicating that, hey, this might be that potential bounce range. It looks like a huge pull down in a dead cat right here. So it could very well fall below $21, but this hammer candle might say, okay, now it's time to start moving itself back up. It did happen on high volume, which is nice. The MACD is pretty bearish. It's below zero and it's spreading downward. So yeah, we know the chart is in bearish context. However, this still can be a potentially good risk versus reward trade. So how would I trade it? Well, a couple ways. One, I would want a break above 22.50 first and then trade momentum to the upside. And then you would capture in like a quick intraday trade because who knows, it might not close there on a daily time frame. Or you can be patient and say, hey, I think the price might pull down just a little bit more around this $21.50 range to $21. And then I would be entering in there to potentially catch a break to the upside. where would I have a stop loss? The stop loss would be right below $21. I would say $20.97. I would be very tight with this one because it can get away, especially if it breaks this major support right here. We can see a big flush to the downside. All right, let's go ahead and move on to the next one. Here's ticker symbol RIG. Now this is just a monster amount of volume coming in, and clearly the stock has just hammered to the downside. The RSI indicator is oversold, so that could potentially mean that we might be getting a bounce. Now, we might not be getting a bounce right now at this particular point in time, because look how aggressive this candle was here. All these candles, just huge, just bearish, monster red candles pushing to the downside with all kinds of volume. So bearish context, it's oversold. You have the MACD crossing over, it's going bearish. So this is also one of those be very aggressive type trades. Why am I bringing this up? Well, look at it. It's coming around a round number right here, $1. Okay, so it's right here at $1. Clearly, when it gets to $1, it moves around to the upside. So can this be potentially where we get some more momentum to the downside, but then will we get some sort of a bounce? Well, if I look at this previous candle here, the low right there was at 76 cents. So 76 cents, 75, whatever you want to call it. We might get some push to the downside, and then eventually maybe the next candle or so will be a hammer candle, and we might get a bounce from that point. So how would I trade this? Well, you can enter in at $1.01, and then you can have a stop loss below 75 cents. That means you're risking 25 cents per share. So do the math. If you bought 100 shares and it stops you out, you would be losing $25, okay? If you bought 500 shares, do the math, $125. So give it some wiggle room right here, clearly because it did pull down there before. And if you get stopped out, just know what you want to risk on these type of trades. But if you do get a bounce from that point and we see it move up, this $1.75 range looks like a really good target. Clearly, it acted as support right here previously and resistance before the breakup or squeeze up to the 200 period moving average. So if it goes from $1 to $1.75, you're getting 75 cents per share. That right there, you're risking this to potentially earn that. That is a good risk versus reward trade, 3-to-1. Let's move to the next one. Here is ticker symbol SE. Now this looks like it had earnings and it gapped up. This looks really nice. It's been in very bullish type of context, but there's a couple different things that I want to point out here. One, clearly this 135 range will act as a level of support because that is where it gapped up. So if we get a pull down to this 135, it would be likely to see a bounce from that point. This is a very volatile stock. Look at the y-axis. It goes from a 140 to 145. That's $5 per share move. Very, very aggressive stock. That's kind of how I personally would play this, but there's another way that you can play this too. This right here is somewhat of a bull flag and it's coiling tightly up. You have lower wicks. So this momentum, it looks like the volume on the breakout right here was really good, and then the volume's kind of dying off. So it could be consolidating sideways and we might see a push higher above 155. So you can wait for a break above 155 and then play into that momentum, or you can just have a stop loss underneath 140 and enter in somewhere around this range. If you do that, you would have a tight stop loss under 140. If you get stopped out, you can look at that gap fill as a potential trade. But if you enter in this range here and then you just have a target right up to there to 155, you're doing a 3-to-1 risk versus reward trade as well. So you have a couple different ways that you can trade this stock. It's in bullish context. It's been moving up. So I would imagine that we can see more continuation to the upside if it hits one of these levels or breaks through the 155. Let's move to the next one. Here is ticker symbol VIPS, and holy moly, this stock got hammered down quickly. It gapped from $24 all the way down to $20. Just a monster loss right there. And then continuation to the downside as low as 17. So overall context of the chart, it's bullish. However, short term, it's very bearish. Now, I like these type of trades because this could set up for a good bounce potential. If I look at this candle right here, that's a nice little green hammer candle. So that could be representing a bounce. It stopped right there at $17. And if I go through the history of the chart, clearly it acted as resistance before, then support, and then we started seeing the move up higher. And look at this, you have the 200 period moving average sloping up and the 50 period moving average, a nice spread between the two. The 200 period moving average can very well act as a level of support. The 50 period moving average acted as support here, here, and here as well. So if you enter into this trade right around here and you have a stop loss below the 200 period moving average, you want to give it some room right there. So $16.32 is where it's at. If you want to be very good with your room, you can go, $15.95. And then you could enter in around this range right here, or even more towards the 200 period moving average if we get momentum more to the downside, and then you play the bounce to the upside. As far as target areas, I would say 20 would be a good target. That would make sense because that's where the gap kind of came down to, and there'd be resistance right there. I would mitigate some shares right at 18 because 18 is also another gap for that specific day. And then I would just kind of mitigate some shares, mitigate a little bit more, and see if the price can recover and start moving more to the upwards direction. Good setup, but you're playing into a lot of fear right now. The RSI indicator is getting into oversold territory, so it would be likely to see some type of bounce from this specific point. But even if you see a bounce, you still manage your risk because days like this, boom to boom, can happen. So you don't want to lever up on any one position because if you do get one of these hammers down, then you could get really hurt by this. There was a ticker symbol MYT that I traded a long time ago, or not that long ago, but I lost 22% because it did a similar gap down like this, but I only ended up losing a couple $100 on that trade because I monitored my risk and I made sure not to lever up on any one position. Let's go ahead and move to the last stock on my watch list. All right, so we are looking at ticker symbol BABA, and really here, it looks like somewhat of an ascending triangle that it's breaking out of. We have 265 right over here. It looked like it was a hard resistance level to get through, and then yet we were putting in higher lows moving up in the upwards direction right here. It's in bullish context. You have the 50 above the 200, and you had this nice pull right here, and it looks like it's trying to peek its head out to move higher. So if we get a continuation and a break above it, you can have a tight stop loss right around underneath the breakout point, which is 265. So you can say 264.95 if you'd like, and then play the momentum to the upside. Another way to play this is if we do end up seeing the price start pull back and coil more within this, you can just buy lower at this 255 range and have a stop loss there underneath the trend line. Or if you want to even give it more room to breathe, keep it under the 50 because the 50 period has a history of acting as a support. All right, that is all I have for you on today's weekly scan. I will see you back on Monday.